Has Bitcoin reached its top? Are we heading for a crash? Is it the end like 2017? Are we going to see some massive corrections? Or do we still have room for the upside? That's what I'm going to cover today, but I'm going to show you a simple, practical way of analyzing where Bitcoin is, which also indicates where the rest of the market is. So if you're ready, get your notepad out and let's get cracking. So Bitcoin, what is FOMO? How do we get over it? You've probably heard of the term FOMO, fear of missing out. Psychology is what drives the markets, especially short term. So we want to look at that. With the amount of news, articles, Twitter, YouTube, even YouTubers going a bit crazy when Bitcoin retraces. So we want to look at how you can get peace of mind, because the markets do have a herd mentality. It's the blind following the blind, and people do react to the news. So I want to show you how you can protect yourself and get the probability in your favor so you can maximize your gains and minimize any losses. So you've probably seen this chart. This is like a psychology chart of where the market moves. And initially, smart money gets into the markets first, then it's institutional investors, and then the public, which is you, the retail investor, me. And if we get in too late, sometimes the market sells off and we can lose. But it's quite difficult to see where the market actually is. So I'm going to show you a simpler way, which is practical, easy to understand, and then you can apply it so you can have more confidence in your approach on when you should be buying, when you should be holding, and when you should potentially looking to be selling. We're going to look at something called Elliott wave theory. Now, sometimes people get very analytical with this. I'm going to show you a simple way of applying Elliott wave theory. Just so you know, Elliott wave principle is to sociology what Newton's law was to physics and is to physics. Sociology meaning really psychology, fear and greed, and how that is applied to the markets. Applied to all markets, but we're going to focus in crypto on Bitcoin, because Bitcoin is the brand. Bitcoin goes up, all the altcoins tend to go up even more. Bitcoin's going down, altcoins tend to go down heavier. So we want to see what is happening with Bitcoin and how we can get the probability in our favor to make sure we are making the right decisions with information that can help us. You may have heard of the phrase, the trend is your friend and ride it until its end. So we want to see, where are we in this trend? Are we at the end of the bull market? Are we in the middle? And what should we expect in the next few weeks and the next few months? And then I'm also going to show you some stuff about Fibonacci, how you can apply Fibonacci with Elliott wave theory in a really simple, practical way, which is going to help you see where the market is and where it's likely to go and what's likely to happen next. So it's all about probabilities and really working with those probabilities so you have the edge on the market and against other individuals so you can make the best possible decision. So what we're going to learn today is why you should expect the next 6 to 8 weeks for there to be a correction before all-time new highs are made. So 6 weeks of sideways to downs, if not 8 weeks, maybe even 12, but I'm going to cover that with you in a bit more depth. How to avoid speculative buying, chasing, when the train has left the station, chasing that train. So the fear of missing out when it comes to buying and selling, how we can avoid it. High probability price targets on both the correction and all-time new highs. So where can we expect the correction, so the pullback, where can we expect it to end and when? And also all-time new highs, where should we expect the market to go and why, and how we can kind of get the edge in our favor so we've got more data points. How to see the mass psychology of the markets, that's going to be important, and how to plan ahead of time. So we are anticipating what's likely to happen as opposed to reacting to what is happening. So if you see the price move and there's a big piece of news announcement that comes up, you may panic, you may fear of missing out. There's fear, uncertainty, and doubt, and it makes things tough. We want to see how we can predict what's likely to happen and get the edge in our favor. So keep our emotions in check and get the odds in our favor. So we're always working with the edge. So again, we're going to focus on Elliott wave. Most people either kind of know the basics or have no clue whatsoever. I want to break it down where you can use it in a really practical way and just understand the simplicity of it and how it can be really powerful when it comes to Bitcoin, other cryptos when it comes to entry points and exit points. So typical Elliott wave theory, markets move in a 5-wave cycle on a wave up, and it also works on the reverse as well. So 1, 2, 3. Wave 3s tend to be the biggest and the most aggressive. And then there's a wave 4, which is referred to as a correction. Wave 2 and wave 4s are corrective waves. And then you have a wave 5, which tends to often equal, if I just get my laser up as well so I can show you this. So this is wave 1. Wave 2 is a corrective wave. Wave 3 tends to be the longest and the most bullish. Wave 4 is a corrective wave, and then wave 5. So we don't need to go in too much into the rules. I just want to show you how this relates to Bitcoin. After a wave 5 is made, you tend to get a correction of an ABC. And I'm going to show you how that applies with Fibonacci and how we can relate to where this is with Bitcoin right now. Now, when it comes to wave 1, 2, 3, 4, 5, there's actually sub-waves within those waves. Now what that means is that they break down into mini waves in between, and typically what it looks like textbook style is wave 1 tends to break down into 5 waves. Wave 2 tends to break down to a minimum of 3 waves, and it's typically an ABC correction. Wave 3 breaks down into 5 waves again, similar to wave 5 but more bullish, more aggressive, so you'll see bigger moves to the upside. And then wave 4 is typically a minimum of 3 waves. Sometimes you do have something called complex corrections which go on a lot longer, but this is like the typical pattern. And then wave 5 tend to also break down into 5 subwaves. Why is this important? Well, Bitcoin right now, looking at the Elliott wave theory combined with Fibonacci, which I'm going to go into in a little more detail to give you an insight of where the market looks like it is, seems to be at the end of a wave 5 of a wave 3. So what that means is potentially there's a wave 3 and a wave 5 of a wave 3, and I'm going to show you how that applies. So what we can anticipate next is a correction, which is typically a wave 4, and we have some price targets so I can show you what you can expect to happen if this plays out as is looking at the moment. So again, these are just some of the price points and the dates, so you can, if you're looking at your own charts, these are the dates that we're working with. The wave 1 starting from March 13th, the price was 3,800. Wave 1, to the top of wave 1 is 12,000 on August 17th, 2020. Wave 2, September 5th, 2020, 9,800. And then recently, the potential, you see there's a question mark here. There's a question mark. Why? Because in Bitcoin, right now with the prices, is not confirmed. We need it to be confirmed. Ultimately, if there's highs, if we have a big correction and then this high is taken out, that will be what will confirm. But I'll go into that in a bit more detail. So let's look at a live chart so we can see what this actually looks like in reality. So if I just pull this up. So here's the live chart. Again, March 13th, 2020, we got a wave 1, a wave 2, what looks like a wave 3. And you see that I've drawn the subwaves, 1, 2, 3, 4, 5. So this is where it looks like the market is at this present moment in time. Hopefully that makes sense. So if I click back, you'll see the 1, 2, 3, and the wave 3 is broken down to 1, 2, 3, 4, 5. And now if we go back to this, we've got this wave, potential wave 3 with the question mark, and we'll see a 1, 2, 3, 4, 5. Now, I'm going to show you now some Fibonacci retracements and extensions. We don't need to get too analytical about it. You can kind of lean on me on this. All you need to know is that the markets tend to move in patterns, and the price patterns on the chart itself actually just tells us the total psychology of the market, what the market's feeling like as a whole, and that gives us an edge to see what's likely to happen next. So if I go into this here, I just want to quickly note as well, this last part of this wave 5 of wave 3, it also breaks down into 5 waves. So you'll see a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. This actually is really helpful when it becomes quite obvious and you get used to these chart patterns and Elliott wave theory, because we can apply Fibonacci price ratios, and all that means is we'll have very definitive price targets that gives us a high edge on knowing, is this an actual wave 3 and what's the probability of that happening and what's likely to happen next. So Fibonacci, right? When I see, I've seen a lot of people use Fibonacci ratios and price extensions, and they don't use it very well. Most people just use the basic retracement tool, which is when a price retraces 50% or 61.8%. When combined with Elliott wave theory, where there's a clear wave count combined with Fibonacci ratio and a few other things that we can also add to give us an extra edge, it is really powerful, really powerful. And as you saw in that previous quote, the sociology of the markets, the psychology of the markets, there was a lot of work done in the early 1900s with Mr. Elliott, R.N. Elliott, and it just really gets things down to a T. And you'll find a lot of things in nature apply to Fibonacci ratios, or Fibonacci ratios apply to a lot of things in nature, but things that we tend to find beautiful tend to have Fibonacci ratios. So we got the Eiffel Tower here, Fibonacci ratios. People have done the metrics and went, oh, these actually follow the Fibonacci ratios. The Mona Lisa, they actually applied the Fibonacci ratios to this. I don't know if Leonardo da Vinci applied the ratios and then drew the painting, but one of the reasons it said that this picture is so beautiful is because it has Fibonacci ratios. Now, just so you know, I'm starting to make YouTube videos because I've been having a lot of requests from my friends. They pick my brain on the phone. They say, yeah, you need to make some YouTube videos, give out this content, give out the value. So, let me know what you think. Let me know, with comments. Let me know what you want to learn about. Is it more technical analysis? Is it fundamentals? Is it more altcoins? Is it more Bitcoin? Is it Ethereum? What do you want to know, and where can I help and make a real difference to you, your trading, your wealth, trade management? There's a lot of things in the area of investing when it comes to crypto, but that's where my focus is, but it also applies to other markets. It helps if you click the like button. If you're liking what you're hearing, if it's helpful, just click the like button. And I'm going to be looking to make a lot more videos in the near future. So do subscribe, click the bell notification so you can know when I am launching my next video. So Mr. Fibonacci, all right, so it applies in nature. So sociology, it applies. It was shown that the psychology of the markets do follow Fibonacci ratios, especially when combined with Elliott waves. And there's some brilliant people out there that have done the hard work, and I'm just going to show you the shortcut. So one of the things that we're looking at right now, to get really, really specific, is Bitcoin's price as of April 2021. Have we reached a wave 3 high, a wave 5 of a wave 3? And one of the price targets that's most typical of a wave 3 of a wave 5, or wave 5 of wave 3, is actually, if I just bring up this laser again, the beginning of wave 1. So this is wave 1 of the whole wave 3, wave 2 and a wave 3 here. Now the price movement from here to here, which is depicted by this arrow, if I measure that, typically, if we apply a Fibonacci ratio to the distance of this, which is one of the main Fibonacci ratios, is 61.8%. So we get 61.8% retracement of this, and we extend it from the wave 4 low, we'll get a price target. And the most typical wave 5 high is 61.8% of a wave 1 to wave 3. Right? So I'm going to show you that on the live chart so it makes more sense. But then also, it's also important to note the typical. So we're just getting probabilities. This is not like a million percent. It's probabilities. We're getting the edge in our favor of what's very likely to occur based on human psychology, Fibonacci ratios, and Elliott wave theory. The typical maximum of a wave 5 high is 100% extension of a wave 1 to wave 3. So we're going to measure from a wave 1 low to the wave 3 high, project that also from wave 4 low, and then we'll see some price targets. And then we can see where that relates to where the price is today. And then we can also do the same on a micro scale with the subdivide of the waves, and we'll see when there's a price cluster of Fibonacci extensions and price projections and alternate projections. Forget the jargon, it's just lines that show you where the price is likely to reverse. So we go back to the live chart again. So let's do some live analysis here. So again, we're focused really on this part of the market between wave 1, 2, 3, 4, 5 of a wave 3 high. And again, what are the price targets? So if we bring up the Fibonacci extensions, now this is TradingView. They have some brilliant tools on here. I'm going to focus on taking the price low of the wave 2 low, which is the beginning of this wave 1, and project it up to the wave 3 high. And I'm going to extend it forward from this wave 4 low. You'll see that we've got two numbers. One is the 61.8% retracement, or extension, should I say, and the 100%. So if I just pop back, this is what we're talking about here. We just measured this over here, and we're projecting it from the bottom over here to get some price targets. And you see we've got some two very clear lines. Now, at the time when the market was looking like this, it was unclear if it was going to be this line or this line. But as we got more data points, we can see that the price is currently hovering around the 100% extension of this price from here to here. So just to make things clearer for us, let's just get rid of the 61%. So now we know, right, we have this price projection, and as we see, we're finding some great resistance here. But if we also do a few other clever things, which just again gives us a bit of a clearer picture. So like I said before, there's a 1, 2, what looks like a 3, 4, and a 5. If I just change that to a micro, and I just want to get rid of these lines as well. So then we could do the same thing. So we've done it from here to here, projected from this wave 4. But how about also looking at wave 1 to 3 here and projecting it from this wave 4 to see if there's a cluster. And when there is, it shows that there's a very strong potential resistance for a wave 3 high. And again, there's the two ratios, 61.8 and 100%. And you can see that the 61.8 is clustered over here and the 100% is over here. So now we've got a cluster. There's a couple of other ratios. I'm just going to put them on here. I'm not going to go into too much detail on what they are for today's purpose, but you'll see there's a couple of other typical price targets. One of them is something called an external retracement from a wave 4 and it's projected upwards. And the most typical are actually the 1.618 and 127. And you see we've got this really strong price cluster here. So this just tells us, or tells me from my experience, I've been doing forex trading and trading for over 10 years. These are really typical in all markets where there's high liquidity, a high level of involvement, and Bitcoin is no different. So we've reached this critical time and price point in Bitcoin with a potential wave 5 high over wave 3. And again, there's a question mark. So the big question is, Jagir, what's likely to occur next? Right? So if we just go back to our chart over here, after a wave 3, we typically get a wave 4, which is done in 3 waves. But typically, the correction on a larger degree, which will be a wave 4, tends to be larger than any previous correction. So to help us and help you visualize this, I'm going to bring up a triangle and actually draw a couple of triangles, or rectangles should I say, and look at all the previous corrections. These are all previous corrections in the move up that we've had so far. So wave 4 will tend to be greater in time and price than each of these. Typically, a wave 4 corrects from the bottom of the wave 3. So we're going to look at this, the whole, from down here all the way up to this wave 3. It tends to correct 38.2%, which is another Fibonacci ratio. So let's get some projections in here so we can get a really clear picture of what's likely to occur next. So I'm going to bring up we just turn these off and put up the 38.2% retracement. The maximum tends to be of a wave 4 is 50%. So now we have a nice price range. I'm actually just going to pull these across to make our life easier to see these. And I'm also going to get rid of these lines. So let's just assume that we're happy that there's a wave 3 high, and we can just clean up this chart. So typically the longest correction over here, and even looking at this correction over here with the wave 1 to wave 2, was around 4 weeks. I think it was 3 weeks. The dates were, yeah, around just over 3 weeks. So we can expect this correction to be anything from 6 weeks to 8 weeks, I would say, as a minimum. So we pull up the calendar and we look, this high was made on April 14th. And we just count 6 weeks. So we just go 1, 2, 3, 4, 5, 6. So the 26th of May should be the earliest that this correction completes. And it should go on for maybe 1-2 weeks from that point. So if we just go to the 26th of May, which is around here. We now have a really clean price and time target for a wave 4 low. Does that mean it's going to happen? Not necessarily, it's just high probability. But it means it's likely that Bitcoin is going to go down below 44,000, potentially even as low as 37,000 according to these retracements. Typically, the correction of a wave 4 tends to happen within the range of a wave 4 over wave 3. So if we just draw these lines also, so we have a really clear picture. And also this low down here. Get this right. So now we have this range. So what would it look like? Now if we just project forward what's likely to occur, not definite, but typically a wave 4 is a minimum of 3 waves. Just like a wave 2, it will look like a 3-wave retracement. So if we can just draw this onto our chart. Again, will it map out exactly like this? Possibly not, but typically we get a minimum of 3 waves down. We have something like 1, 2, and a 3. And that'll be a wave 4 low, and that's what we're anticipating. So it's to prepare yourself. It's prepare yourself for this and to see what's likely to occur. Last but not least, on this, if this plays out this way, what's likely to occur next? Well, then typically you'll get a wave 5. So if we now look at this pattern over here, we got a 1, a 2, a potential wave 3. We get a correction of a wave 4. And then last but not least, let's look at what happens typically with a wave 5. Well, we've spoken about it on a smaller scale. Now let's just do it on a larger scale. Typically a wave 5 is measured from a wave 1 low to a wave 3 high. And we can project, let's just say a wave 4 came to this point here. We can project forward the 2 main key points, 61.8 and 100%. And where does that take us? So the likely price points in the future is likely to be 76,000 as a minimum and 100,000 as a maximum. Is it likely to go much higher? Possibly. It tends to, crypto tends to have a 5th wave blow off. So we might see, 150. Some are predicting even 250, 500,000. No one actually knows, but we want to go with the probabilities knowing, right, we're probably going to have a correction, which is a wave 4, before we start seeing some all-time new highs and making higher highs on towards the 76,000 and towards the 100,000. So before we start making any other predictions, we can just go, we need more information. We need to see if the wave 4 does play out like this. And if it does, we'll then be able to do some more bespoke and a more relevant analysis. So until this happens, we don't need to look forward too much at this point. All right. This was another thing that I came across in terms of 2011, 2013, 2017, and now we're in 2021. And the multipliers that have occurred, I thought it'd be quite interesting to see what would it look like if the same ratios continued. So if this makes sense, so the multiplier above the previous top, So the previous top was $31. The multiplier was 37x in 2013, which took us to 1,000 or just over 1,100. And then from here, there was a 17x multiplier, which took us to 20,000. And these are, if we went the same ratio, the next multiplier would be around 8. And what would the price be? Well, it would be around 160. Is that what would occur? We don't know yet, but that could be the price. So just quite interesting, I thought. And how far did it fall after the new high was made? Well, in 2011, we had a 94% retracement, which meant from $31, it went back down to $2. It was brutal if you bought at 31 and came down to $2. So is that possible again? Yes, it's possible. Is that likely? We're not sure. 2013 had an 85% correction. So the high of 1100 pulled back to 173. In 2020, or 2017, should I say, went from 20,000 and pulled back 84% to 3,100. So again, we want to be prepared for it. So if that does occur, if we did get to 160 and the market did pull back 84% as it had done previously in history, we would come back to around 25,600. That's why buying near a low is really important. And it's likely that this 25,000, if we ever get to that price again after a big bullish move, will probably be in 2022. So are we in a bubble? Have we hit the high? I don't think so. I think we're at a wave 5 of a wave 3. Anticipate a wave 4 correction, follow through with a nice wave 5, which will tend to go on for a few months, probably the same length as the wave 1 and the wave 3. So we can project that forward, but let's wait to see if we do hit a wave 4. If you're holding Bitcoin, hopefully this gives you a bit of information on what you should be doing. You know, if you're comfortable holding, should you be selling? And if you're looking to buy Bitcoin, you know, likely it's going to be stand aside, wait for a correction to occur. There's a few other metrics we can look at in terms of other indicators that can give us a bit more information. But for now, let's just see if it does pull back towards the under the 50,000, into the 40s, and possibly under 40,000 itself. And then if it does, we'll have some more information, and then we can do some more analysis and see what to do next. If you've enjoyed this video, like, subscribe, comment. Please comment. Let me know how I can help you more, how I can be of value to you, what will change your game, what are you struggling with. Let me know, and I'll put a video together for you. Take care. See you soon.